Imagine you're finally ready to invest your money. You open your investment app and immediately face a confusing question. Should you buy an ETF? Or should you choose an index fund? Most beginners think they're completely different investments. The truth is much more interesting. In fact, many ETFs are index funds, and understanding the difference could save you money and help you become a better investor. Let's be honest, finance loves using complicated words. ETF, index fund, mutual fund, expense ratio, exchange traded fund. No wonder beginners feel overwhelmed. But today, we'll make everything simple. By the end of this video, you'll know exactly which one fits your investing goals. Let's start with index funds. Imagine walking into a fruit market. You could buy just one apple, or you could buy an entire fruit basket. Which gives you more variety? Obviously, the basket does. An index fund works the same way. Instead of buying one company, you buy a basket containing hundreds of companies. If one company struggles, the others can help balance your investment. That's the power of diversification. Now that you understand index funds, let's talk about ETFs. ETF stands for Exchange Traded Fund. That name sounds complicated, but the idea is actually simple. Think of an ETF as a basket of investments. Instead of buying just one company, you buy one investment that owns many companies. Some ETFs follow the biggest companies in America. Others track technology, healthcare, energy, or even the entire stock market. Here's what makes ETFs unique. ETFs trade on the stock market, just like individual stocks. That means you can buy them during market hours. You can also sell them whenever the market is open. Their prices change throughout the day, just like regular stocks. That's why many investors like ETFs. They're flexible, easy to buy, and easy to sell. Now, here's where many beginners get confused. An ETF is not the same thing as a mutual fund. Both can own hundreds of companies. Both offer diversification, but they're bought differently. ETFs trade all day long. Most traditional mutual funds are priced only once each trading day. For long-term investors, that difference often doesn't matter very much. What matters more is choosing a diversified investment and staying consistent. Now, it's time for the comparison you've been waiting for. At first glance, ETFs and index funds look almost identical. Both can own hundreds or even thousands of companies. Both help reduce risk through diversification. Both are popular with long-term investors. So what's the real difference? Let's compare them one category at a time. First, let's talk about fees. Every investment has a cost. This cost is called the expense ratio. The lower the expense ratio, the more of your money stays invested. Many ETFs have very low expense ratios. Many index funds also have low fees. Next comes liquidity. Liquidity simply means how easily you can buy or sell an investment. ETFs usually offer more flexibility because they trade throughout the day. Finally, let's mention taxes. In many cases, ETFs can be more tax efficient than traditional mutual funds. But tax rules depend on your country and account type. Always check the rules that apply where you invest. Let's look at the mistakes many beginners make. Mistake number 1. Thinking ETFs always perform better than index funds. That's not necessarily true. If both track the same index, their performance will usually be very similar. Mistake number 2. Choosing investments based only on what's popular online. Popularity doesn't always mean quality. Mistake number 3. Changing your strategy every few months. Successful investing rewards consistency, not constant switching. So, after everything we've discussed, which one should you actually choose? The honest answer is, it depends on your investing style. If you like the flexibility to buy and sell during market hours, an ETF may be a better fit. If your goal is simply to invest consistently for many years, a traditional index fund can also be an excellent choice. Remember, the investment itself matters more than the label. A low-cost, diversified investment is often more important than choosing between these two options. The biggest mistake isn't choosing the wrong one. It's never getting started at all. Here's an easy way to decide. Ask yourself one question. Do I want to trade during the day? If yes, an ETF is probably the better choice. If your answer is no, focus on consistent long-term investing instead. Whichever option you choose, stay invested, stay patient, and let compounding do the hard work. Let's quickly review what we've learned today. Both ETFs and index funds can help you build long-term wealth. Both provide diversification. Both can have low fees. The biggest difference is how they're bought and traded. Most beginners don't need to obsess over choosing the perfect one. What matters most is starting early, investing consistently, keeping your costs low, and staying invested for the long term. If this video helped you understand the difference between ETFs and index funds, subscribe to Investivo for more simple investing and personal finance videos every week. Thanks for watching, and I'll see you in the next video.